All right, so let's dive into all these Tata Motors documents you sent my way.
Yeah.
Earnings transcripts and presentations, even a recording of the earnings call. Seems like it was quite a quarter.
Yeah, pretty eventful.
Lots of product launches and factory groundbreakings, even some sad news.
Yeah.
Though the numbers themselves aren't exactly a cause for celebration.
That's true. It has been kind of a mixed bag this quarter for Tata Motors.
Yeah.
But there is a sense of optimism that things will turn around in the second half of the fiscal year.
Okay.
They are still aiming to be net debt-free by the end of the year, which is a pretty ambitious goal considering the current state of the economy.
Net debt free.
Yeah.
For the whole Tata Motors group.
Yeah, the whole group.
Wow.
That's a bold move.
Yeah. Makes you wonder how they plan on doing that.
Okay.
Before we really dig into the financials, we can't ignore the big news that really overshadowed this quarter.
Yeah,
The
absolutely.
passing of Ratan Tata.
It's a major loss, not just for Tata Motors, but for India as a whole. I mean, his vision and leadership are what transformed the company into the force it is today.
Yeah, and the earnings transcript even starts with a tribute to him, stating that the company owes its existence to Mr. Tata.
Yeah,
His legacy is so intertwined with the company's identity,
absolutely.
it will continue to shape their direction moving forward.
You have to keep that context in mind when you're looking at these results, because it's not just economic headwinds, but also navigating this period of transition.
So let's start with that overall picture for Q2 FY25.
Okay.
It was definitely a difficult quarter for the Tata Motors Group, with revenue down and profits dipping. But you mentioned there's hope for a recovery in the second half.
There is, yeah, and it's interesting.
Yeah.
Overall revenue is down, but revenue per unit is actually up.
Oh, okay.
So that indicates that they're shifting towards higher margin vehicles instead of just going for volume.
So it's not just about selling a lot of cars, it's about selling more profitable cars.
Exactly.
Interesting strategy, especially in a shaky market like this one. But let's take a closer look at the individual segments.
Okay.
Starting with Jaguar Land Rover, or JLR as most people know it.
Yeah.
How did they do?
Their performance mirrors the struggles that other global luxury car makers are facing.
Okay.
Revenue is down year over year, but like the group overall, they're seeing an increase in revenue per unit.
Okay. And the transcript mentions that a quality hold on 6,000 vehicles actually impacted sales in Q2.
Right.
But they say that will be resolved in Q3.
Okay.
They also had some issues with aluminum supply because of a flood at one of their suppliers.
Oh, wow.
Talk about insult to injury.
Yeah, it just shows that these large companies are still susceptible to supply chain disruptions and unpredictable events.
Yeah, they can't avoid everything.
And you can see the toll it took on JLR's profitability.
Yeah, their EBIT, or earnings before interest and taxes, is down. Partially due to increased sales support.
Right, they're having to offer more incentives and discounts to get those cars moving.
Which makes sense when demand is soft.
Yeah.
But does that raise questions about whether JLR can maintain its ambitious full-year guidance with all these pressures?
That's a good question.
Yeah.
They seem pretty confident,
Okay.
although they do say they have very limited headroom.
Uh-oh.
But what I found particularly interesting was their situation in China.
Oh, yeah, China.
Because the Chinese auto market is going through a really turbulent phase.
Yeah.
Widespread discounting and overstocking of inventory.
Uh-huh.
Even retailer insolvencies are contributing to a very volatile environment.
Yeah, that sounds rough.
And so JLR is having to adapt,
Okay. How so?
strategically supporting their dealers and really carefully managing their inventory
Okay.
to try and avoid getting caught up in this discounting frenzy.
So they're trying to stay above the fray.
They have to. They
Yeah.
need to protect their brand and maintain their profit margins while staying competitive in a really key market.
But they're also facing intense competition from Chinese electric vehicle makers.
That's right.
Or NEVs, for new energy vehicles, as they call them over there.
Yes.
Particularly in the more affordable car segments.
Exactly.
So it makes you wonder, how sustainable is their current import-focused strategy in China, given all of that?
Yeah, that's the key question, especially considering JLR's big commitment to becoming an electric-first brand.
Yeah.
They're putting a lot of resources into their Reimagine strategy, which aims for net carbon zero by 2039 and a fully electric lineup by 2036.
And they even showed off their brand new EV factory in Halewood in the presentation.
Yes.
A $500 million investment.
That's a big investment, but The interesting thing about this factory is that it's very flexible.
Oh, how so?
It's designed to adapt production based on the demand for traditional gas-powered cars, hybrid, and electric models.
So they can shift gears depending on what the market wants.
Yeah, exactly.
That's smart thinking, especially with all the uncertainty in the market.
Mm-hmm.
But will that flexibility really be enough for JLR to reach those goals?
Well, that remains to be seen.
Yeah, we'll have to keep an eye on that.
Definitely.
But let's move on now to Tata's commercial vehicles division,
Okay.
or Tata CV.
Tata CV saw an 11% decline in Q2.
Wow. So the commercial vehicle industry in India as a whole is having a rough time.
The entire industry is struggling.
What are some of the reasons for that?
A bunch of factors.
Okay.
Slowdown in infrastructure projects, reduced activity in the mining sector, and just heavy rainfall in general.
Yeah, those would do it.
And Girish Waugh, who's the executive director at Tata Motors,
Okay.
he mentioned something interesting in the earnings call.
What's that?
He said that they can now actually track the average number of kilometers driven by commercial vehicles on a daily basis.
Oh, wow.
And that data showed a significant year-on-year decline to like 15 or 17%.
Oof. That's a pretty clear sign that economic activity is slowing down.
Yeah, no doubt about that.
But despite all these challenges, Tata CV managed to maintain double-digit EBITDA.
Yeah, earnings before interest, taxes, depreciation, and amortization,
Right.
which is pretty impressive.
How do they pull that off?
Well, favorable pricing and some positive trends in commodity prices help to offset the impact of those lower sales volumes.
So they're making the most of a tough situation.
They are, and they're also making big moves in electric mobility,
Oh, right. Like what?
particularly with buses and trucks.
Mm-hmm.
And they're even seeing growth in the smaller ACE EV segment,
Yeah.
which is interesting because that's despite the discontinuation of government incentives.
So even without financial support from the government, there's still real demand
That's right.
for these electric vehicles.
Mm-hmm. And they're not just focused on the vehicles themselves.
Okay.
They're also investing heavily in their digital platform, Fleet Edge.
Oh, yeah. I've heard of that one.
It now has over 710,000 active vehicles on it.
Wow. That's a lot.
And their machine learning-powered fuel efficiency solution called Mileage Sarathi
Okay.
is helping fleet owners cut down on costs.
Interesting. So they're really trying to build a whole ecosystem around their commercial vehicles.
That's right.
Not just selling trucks and buses, but providing additional value through digital services.
Exactly. And I think these digital initiatives could really set them apart from their competitors in the long run.
Yeah, it's all about that added value.
Mm-hmm.
Okay, so we've talked about JLR and Tata CV.
Yes.
What about Tata passenger vehicles, or Tata PV?
All right. Well, the Indian passenger vehicle market is also having a bit of a sluggish quarter.
Really?
Yeah, industry registration and wholesale figures are both down.
So it's the same story mirroring that broader economic slowdown.
Pretty much.
Okay,
But Tata PV has managed to hold on to its market share.
that's good.
Yeah, thanks in part to strong sales of their SUVs,
Like which ones?
especially the Punch.
Oh yeah, the Punch. I've heard good things about that one.
It was actually the top-selling vehicle in the entire industry in the first half of the year.
Wow,
Over 100,000 units sold.
that's impressive.
Yeah, considering the overall market conditions.
So they're doing something right.
They are, and they've also maintained their leadership in the EV segment, even with growing competition.
It's interesting how they're managing to hold their own in both traditional and electric vehicles.
Yeah, they're doing pretty well.
But they also launched a few new products this quarter,
Yes, they did.
including the Nexon ICNG, the Nexon.EV with a 45 kilowatt-hour battery, and the much-anticipated Curve.
Lots of new offerings.
And they also strategically lowered prices on their EVs
Right.
to make them more competitive with gasoline-powered vehicles.
A bold move.
And it seems to be working.
It does.
Their EV profit margins are actually improving despite those price cuts.
Yeah, which suggests that they're finding ways to produce them more efficiently.
Makes sense.
And it all ties in with their goal of making EVs more accessible to a wider customer base.
Which is a good goal.
It is.
But did these new launches, especially the Curve, cannibalize sales of their existing models?
That's a good question.
Like the Nexon?
Yeah, it's a bit too early to say for sure.
Okay.
But initial data from October indicates that there hasn't been any significant cannibalization so far.
So it's looking good for now.
So far, so good.
All right, so we've covered all three major divisions now.
Yeah.
What's the overall picture of Tata Motors Group's financial health looking like?
Well, despite the challenges they faced this quarter, their cash flow is holding steady,
Okay.
with cash profits after taxes covering their capital expenditures.
So they're still in a good position to invest in their future.
Exactly. And both JLR and Tata Motors Domestic expect working capital to improve
Okay.
as growth picks back up in the coming quarters.
That's reassuring to hear.
And there's some more good news.
What's that?
Both Tata Motors and JLR have achieved investment-grade ratings.
So their financial standing is pretty solid.
It is. This shows that the credit rating agencies have confidence in Tata Motors' long-term prospects.
Which is a good sign for both investors and stakeholders.
Absolutely. It's a testament to their strategic focus and financial discipline, even when they're going through tough times.
So what does all this mean for our listener?
Well, I think it paints a picture of Tata Motors as a company in transition. They're facing some headwinds, but they're really pushing forward with these new technologies and strategies.
But will those bets on EVs and digital platforms actually pay off?
Well,
And can JLR really navigate those choppy waters of the Chinese market and global demand?
those are the million-dollar questions.
Yeah,
And the answers are going to depend on a whole bunch of different factors.
definitely. But what's clear is that Tata Motors isn't just sitting around waiting for things to happen.
No.
They're actively adapting to this evolving landscape of the auto industry.
Absolutely.
And speaking of evolving, there was one thing that really stood out to me while going through these documents.
What's that?
The lack of talk about autonomous driving.
Oh, yeah, I noticed that too.
It's almost like a blind spot.
It does make you wonder,
Yeah.
is Tata Motors falling behind in this crucial area?
Yeah.
Or are they just biding their time working on something big behind the scenes?
It's hard to say without more information,
Definitely.
but it raises a really important question for any business in a fast-changing field. How do you balance staying true to your strengths while also embracing new disruptive technologies?
Yeah, you don't want to just abandon what's made you successful, but you can't afford to ignore the changes happening around you.
It's about finding that balance,
Right.
knowing when to evolve and when to double down on what you're good at.
Exactly. And that's something that Tata Motors will have to figure out as they move forward.
For sure. But for now, let's come back to some of the specifics we've talked about.
Okay.
JLR's goal to become an all-electric brand by 2036 is a pretty bold move,
It is.
but they're definitely facing some strong headwinds,
Yeah.
especially in China.
That's right. The situation in China is really quite interesting because it's like a perfect storm of challenges.
Like what?
Slowing economic growth, fierce competition from those local EV manufacturers,
Right.
and a really complex regulatory environment.
And remember those retailer insolvencies we talked about?
Yeah.
That adds another layer of complexity to the whole situation.
JLR really has to work closely with their remaining dealers to make sure that they can get through this.
It really shows their commitment to the Chinese market.
It does.
They're not giving up.
No, they're adapting their strategy and fighting to maintain their presence in this key region.
But they're also not putting all their eggs in one basket.
Right.
Their reimagined strategy is a global one.
Yeah.
And they're investing in EV production in other key markets, too.
Like where?
Like the UK, for example.
That makes sense.
That kind of flexibility
Yeah.
to adapt to different market conditions is going to be essential.
Absolutely.
Because the speed at which people are adopting EVs really varies from country to country.
Yeah.
So JLR needs to be able to adjust their products and their production plans accordingly.
Exactly.
And speaking of production, their decision to extend the life cycle of their traditional gasoline-powered vehicles is kind of interesting.
It is.
On the one hand, it lets them keep making money from those existing models while they ramp up EV production. But on the other hand, it could be seen as delaying the shift to a fully electric future.
Yeah, it's a tricky balance. They're trying to manage investor expectations and meet those regulatory requirements.
Yeah.
And of course, they have to satisfy consumer demand.
While dealing with a global supply chain that's still recovering from all those disruptions we've had in recent years.
It's a lot to handle.
It is. But I'm really curious about their pricing strategy.
What about it?
They've been pretty aggressive in cutting prices on their EVs, especially in India.
They have, and it seems to be paying off.
It does.
They're achieving those cost reductions in their EV production, which lets them lower prices without killing their profit margins.
Right.
So it's a smart way to boost demand and gain market share in that rapidly growing segment.
And it fits with their stated goal of making EVs more affordable for a wider range of customers.
Exactly.
But what about their traditional internal combustion engine vehicle business?
Wow.
How are they managing that transition?
They're focusing on those higher margin models that we talked about before.
and continuing to invest in new product development for both gasoline and EV platforms.
So they're not giving up on either one just yet.
No, they're playing both sides of the field.
They're also making the most of their digital platforms.
Yeah, like Fleet Edge
Right.
for their commercial vehicles.
To offer these value-added services.
Exactly.
It's a way to stand out from the crowd and create those new revenue streams.
That's right.
And it just shows how the auto industry is becoming more about software and services now.
More than just the car itself.
Yeah, it's not just about building a great car anymore.
Exactly.
Looking at all of this really highlights the complexity of what the auto industry is facing today.
Yes.
It's about managing these global supply chains,
Mm-hmm.
navigating geopolitical tensions,
Uh-huh.
adapting to all this rapidly evolving technology,
Yeah.
and, of course, keeping up with what customers want.
It's truly a multidimensional challenge.
Yeah, and Tata Motors, like all the other major players.
They're having to completely rethink their strategies and business models to thrive in this new environment.
That's right.
They have to make tough choices about where to invest,
Yeah.
which markets to focus on,
Hmm.
and how to balance making money now with building something sustainable for the future.
Saying that their success will depend on how well they execute those decisions.
Yeah, it's going to be really fascinating to see how this all plays out in the coming years.
Absolutely.
But now I want to get your thoughts on some specific questions that came up during the earnings call.
Okay.
Investors and analysts seem particularly concerned about JLR's ability to meet its full-year guidance.
Yeah, given those headwinds they're facing,
Right.
there was a lot of skepticism.
But Richard Molyneux, who's the CFO over at JLR,
Mhm.
he explained why they're keeping their guidance.
Okay, what did he say?
He pointed to a few things,
Okay.
like fixing that quality hold on those 6,000 vehicles,
Mhm.
getting the aluminum supply issues sorted out, and the fact that their business usually sees the strongest cash flow in the fourth quarter.
Makes sense.
He also mentioned the expected improvement in working capital in the second half of the year,
Yeah,
but he was clear that the situation in China is still a major risk.
of course.
He said they're keeping a close eye on what's happening over there,
Okay.
and they're ready to adjust if they need to. But for now, they believe they can hit their targets.
So it's a wait-and-see approach?
Yeah, but it's a pretty bold statement.
It is.
Shows they're confident in their ability to overcome these challenges.
Yeah, and remember, both Tata Motors and JLR now have those investment-grade ratings.
Right.
That's a big vote of confidence from the credit rating agencies.
Shows they believe in their long-term prospects.
It does.
But it's important not to lose sight of the human element in all of this.
Yeah.
Ratan Tata's passing is a reminder that these companies are more than just numbers on a spreadsheet.
Right.
They're made up of people with passions, dreams, and a shared vision. And his legacy will continue to shape Tata Motors for a long time to come.
Absolutely. It's a legacy built on innovation, social responsibility, and a deep commitment to India's progress.
And that's something worth remembering as we move forward in our discussion.
Definitely.
So let's take a quick break here.
Okay.
We'll come back in just a few minutes and dig deeper into Tata Motors' strategic initiatives,
That's good.
particularly their big push into electric mobility.
And looking forward to it.
It's true, businesses are driven by people, and Ratan Tata's vision will definitely continue to be a guiding force for Tata Motors.
Absolutely.
But let's get back to the details of their current strategy,
Okay.
particularly this big push into electric vehicles.
Yeah, their EV initiatives.
They're making some serious investments in both passenger and commercial EVs.
They are, but what I find interesting is that they're not just focusing on one type of technology.
Oh, okay, so they're not putting all their eggs in one basket.
Exactly. They're exploring all sorts of things.
Like what?
Battery electric vehicles, obviously,
Hmm.
but also CNG and even hydrogen fuel cells.
So they're keeping their options open.
Right, because the future of all these different powertrain technologies is still up in the air.
Makes sense. It's smart to hedge their bets and be ready for whatever the market demands.
Exactly, and they're using their expertise in both passenger and commercial vehicles to develop a whole range of solutions.
So what kind of EVs are we talking about?
Everything from the tiny ACV, which is designed for like those last mile deliveries,
Okay.
to full-size electric buses for public transport.
So they're covering a lot of ground.
They are. They're trying to be comprehensive.
And are they also working on the charging infrastructure?
Yeah, that's crucial if EVs are going to go mainstream.
Absolutely.
And they're not doing it all alone. They're collaborating with partners
Okay.
to develop better battery tech and secure those raw materials needed for production.
It's a big undertaking.
It's a whole ecosystem they're trying to build.
Well, it seems like it's working.
Yeah, so far so good.
They're seeing good demand for their EVs, even without those government subsidies we mentioned earlier.
That's a great sign. It means consumers are buying into Tata's EV vision.
Yeah, they're putting their money where their mouth is.
Exactly. And it's not just about the tech itself.
Right.
It's about affordability, too.
Making EVs a real option for more people.
Yeah. And those price cuts we talked about, they really reflect that.
Yeah, it feels like they're genuinely trying to build a sustainable EV business that benefits everyone, not just the company itself.
A more holistic approach.
Exactly.
Yeah.
And speaking of sustainability, they're also making good progress on reducing their environmental impact.